Yeah, I think the cycle got extended. It got extended because they increased the maturity of the US government debt from 4 years to 5 years, and that pushed the cycle out longer. And so that's why the business cycle has been subdued, like Main Street's not participating, but Wall Street has. And the moment that that kind of changes, which all of our forward-looking indicators suggest, feels like bananas should be on the menu. Generally speaking, the market will front run this. So we're still trying to decide when the government's going to reopen. My best guess is we will have full clarity by the end of next week. Now, whether they agree something soon, but the probabilities, the market will start finding traction. And then as it comes, it'll then start accelerating from it.
So you think we're going to hold 100K?
Yeah, and I think we will end the year a lot higher. Don't forget, last year, we didn't start rallying until November 7th. And then we did 64% from then.
According to Raoul Pal, the main driver of almost everything, from Bitcoin to the NASDAQ, is global liquidity. Think of liquidity as the oxygen of financial markets. It's the amount of money circulating in the system created by central banks through quantitative easing, credit creation, and mechanisms like the Treasury General Account, or TGA. Raoul points out that roughly 90% of Bitcoin's price action can be explained by changes in global liquidity. When liquidity rises, assets surge. When it falls, markets tighten, prices drop, and volatility spikes.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
The main driver of crypto prices, NASDAQ, everything is global liquidity. It's like the amount of money central banks create in the system, whether it's through the banking system itself or whether it's through other mechanisms like the QE or things like the Treasury General Account. So that is the liquidity. That explains 90% of all Bitcoin's price action, which is fascinating. The outperformance of alts versus Bitcoin is driven by the business cycle, the ISM survey. Once that goes above 50, people have more money, they start speculating, going further out the risk curve. So everything had been following the money, global M2 and global liquidity up until about July. Well, what happened in July was, firstly, the tariff thing started kind of kicking in and people were starting to get confused. But then what really happened is the Treasury began to build the Treasury General Account ahead of a government shutdown. So what that is, when they build it, they're basically not spending money out of their bank account. So it's less money going into the economy. And normally that's offset by what's called the reverse repo market that had been already drained. So there was no other liquidity to add because they were also doing quantitative tightening, i.e. taking money out of the system as well. So we had this double tightening going on. Okay, that was going to be a short period of time when they rebuilt the TGA and then the government shut down. So now they can't even spend the money that's in there. There's like $1 trillion in the government account and they can't spend it because all the workers have been furloughed. So that means that money doesn't go into the economy. The reverse repo is drained, so there's no other offset, and they had quantitative tightening. So suddenly liquidity starts seizing up in the system and we start getting weird things going on. And so the Fed immediately said, we're going to stop QT. So that was at the margin, we're going to add liquidity. And then they've even recently today saying, you know what, we're going to have to expand the balance sheet to give the banks more reserves. So they're using the banks to increase the liquidity in the system. So now we're stuck still with them having a record amount of money that they need to spend. They need to spend $250 billion in 3 weeks or a month to pay everybody for their back pay. So that's all going to flood back into the system the moment the government reopens. And when it reopens, that's when liquidity comes back. They drain the TGA over time, but now they have a new liquidity measure, which is the ability to increase the balance sheet. And then the multiplier from the banks goes through. Generally speaking, the market will front run this. So we're still trying to decide when the government's going to reopen. My best guess is we will have full clarity by the end of next week. Now, whether they agree something soon, but the probabilities, the market will start finding traction. And then as it comes, it'll then start accelerating from it.
So you think we're going to hold 100K?
Yeah, and I think we will end the year a lot higher. Don't forget, last year, we didn't start rallying till November 7th. And then we did 64% from then. If I look at last year, from November, Bitcoin rallied 62%, ETH 74%, Sol 74%, SUI 235%. The previous year, we had the same factor. All year, we did nothing, exploded at the end of the year. Bitcoin 37%, ETH 40%, Solana 305%, SUI 128%. So we're 7th of November. This is where it started last time. Who knows? But, from here, we should be significantly higher. People are so impatient. They think banana needs to be immediate. It needs to be in their precise bags. And that's the issue. We're at that point in the cycle where over time, the liquidity has to come to roll the debt. And as that comes, prices go exponential. And it won't be for everything. Obviously, there's too many tokens now. I don't know how many tokens there are. There's like 1 million of the things.
3 trillion, I think, is my reference.
Yeah. So generally speaking, it's going to be, I think the cycle got extended. It got extended because they increased the maturity of the US government debt from 4 years to 5 years, and that pushed the cycle out longer. And so that's why the business cycle has been subdued, like Main Street's not participating, but Wall Street has. And the moment that kind of changes, which all of our forward-looking indicators suggest, feels like bananas should be on the menu. Libertarians say, well, I've not seen any difference with no government. Yeah, you have, because numbers gone down. We've all got poorer because liquidity has been drained out of the system. But they're structurally going to change this next year as well. They're implementing something called the SLR, the Strategic Lending Requirement, which allows them to allow the banks to keep more reserves, which means they'll buy more government bonds and allows them to lend more money. So they're trying to solve this problem over the longer term. So that's another mechanism by which we'll add liquidity next year that we didn't have this year. We really had a broken system this year because we only had the government which draws down its bank account and then builds it back up again. So it keeps going in cycles. We've always noticed this. We're like, why can't we have nice things? When the market gets to the high, it ends up coming back down again. It's because of this mechanism. But that should now be replaced going forwards.
Crypto, he says, will play a central role. Why? Because it sits at the intersection of monetary debasement and technological adoption. As governments print to cover debts and banks expand credit, the value of scarce digital assets will rise exponentially. Meanwhile, AI agents will increasingly use blockchain rails to transact, verify, and coordinate autonomously. Crypto is not just a speculative asset, it's the native currency of the future digital economy. He also sees long-term value in digital art and NFTs as the symbols of our emerging digital culture. In a world flooded with AI-generated information, authenticity and scarcity will become priceless.
Yeah, so the exponential age thesis plays into all of this, right? The answer to this mess of demographics where global growth keeps falling because we've got aging populations, productivity goes down because old people are less productive, and debt growth is the other driver, and we reached that peak 2008. So how are we going to solve this? We're going to solve this by changing that population number by the robots and the AI. So that is coming, but that's only just started. So we've still got this everything code cycle to continue to play out, which is we have to refinance these debts because the debts are too big versus trend rate of GDP growth, i.e. there's not enough taxes to pay for it. So what they do is debase the currency to kind of make it go away. And they're doing that until the robots and the AI kick in. And we've heard that from Scott Bessent, we've heard it from Donald Trump, we've heard it from Elon Musk. It's like productivity has to pick up. And that's what it's going to come from. So that happens, my guess is we start to get a bizarre world where this starts to really affect economics by about 2030, 2032. Suddenly we'll see GDP growth accelerating, but unemployment might rise. We'll see AI agents as better investors than us. What does it mean for financial markets for us? We get to a point that I call the economic singularity. We have kind of the whole economic system as we know it breaks, and we have to develop a new one because somehow we need to tax the robots and the AI. How the hell do you do that? You know, people talk about universal basic income. but we need to solve who do we tax, where do we get that money from, all of these issues, and then how do we deal with the fact, and this is the bigger thing, is people don't really realize is we're arguing over, do we have AGI or not? Artificial Generalized Intelligence. We currently have AI that is as smart as a PhD in every subject known to humanity. Right, so this is a polymath that's smarter than anybody on Earth. The next phase, because the intelligence of these models keeps like doubling every year, is we go from an IQ of like 150 to an IQ of 300. We have now replaced ourselves with the apex intelligence. The history of humanity, we have always been apex intelligence. And I have a thesis behind all of this that the fundamental purpose of the universe is essentially to convert units of energy into units of intelligence. And that's the whole evolutionary process. And what we've just created is a new superintelligence. And so we're not the apex creatures. So what does that mean for economies? What does it mean for us? What does it mean for our role in it? I'm not a doomer. I don't think this is the end. I think we just do things differently, which is about being human. What can we do that the AI can't? We're humans. It's actually not easy to bet on it cleanly. Outside of NVIDIA, and NVIDIA's dominance, like Bitcoin dominance over time, has to fall. So we need to see other players coming in. So where's the cleanest bet? Crypto's one of them. Why? Because in the interim, we have to debase currency. And also, agents will use crypto rails. So we kind of know where this is going. So that makes it a very easy bet. It's also been the fastest adoption of any technology or financialized technology the world's ever seen, because AI you can't directly invest in so easily. The other thing is, I try and think where the world will go. So we can make plenty of money up into that economic singularity, whether it's out of crypto, buying tech stocks, number will go up over time. There will be a period where everything corrects, NASDAQ corrects 30%, but that's kind of noise within the overall trend. But what I'm thinking about is, what about the other side of this? What has value? Now, I think crypto still has value in that because of its use cases and how it evolves. Things like digital ID become more important. That uses blockchain rails. But I also think about the value of digital art. Because in a world where you're competing in financial markets with AGI, you have no chance. So what assets can you hold? Well, you want scarcity. So can it be a house? Yes, but houses have this demographic issues and other issues. We also have the movement out of cities into places. We have remote work, so we can move globally. But when I look at it, digital art is, if we're going to go from a $4 trillion asset class today in crypto to 100 trillion by, let's say, 2032, that's going to create 97 trillion of wealth. Let's halve that, because I'm an idiot. So you still create $46 trillion of wealth. We'll have made it in crypto. So digital assets and digital scarcity is something that we all understand. And the culturally relevant marker stones of that are NFTs. So I've been hoarding and buying as many as possible for this thesis, because I know in the future the world is more digital than today. And these artifacts, the memetics of today, the cultural stories, are going to be incredibly valuable in the future. It is so important because it leads to ASI, which is the godlike superpower, that the forces behind it are so extraordinary that it cannot be stopped. And no government, the US nor China, can allow that to happen. So whatever anybody thinks about a bubble, will prices go up too much for a bit? Yes. Will it stop? No. Will it accelerate? Yes, it has to, because the game is too big. And so if that is the case, then I know that quote from Sam Altman's CFO about, would they bail them out? No, they wouldn't bail out one, but they would bail out all of them. There's no way. So yes, you can have a bust. Of course, you'll have excess exuberance in share prices and stuff like that. But the reality is the technology is too important for all of humanity to not. So my working hypothesis is we will end this as we go into the economic singularity when we don't even know what financial markets are anymore. What's a company? How does this all work? By the time we get to that, 2030, 2032, that will probably be the biggest bubble we've ever seen, because every single investor is going to throw in the towel to this megatrend because they realize it's backstopped by governments. It's all the cash flows of the largest corporations on earth. It's all of the density of talent all go into one thing. So that bubble is going to be massive, and we haven't even started yet.
Every revolution ends in excess, and Raoul believes the AI and crypto revolution will end in the largest financial bubble the world has ever seen, sometime around 2030, 2032. As AI becomes indispensable and productivity explodes, every investor, corporation, and government will pile into the trend. The logic will be simple. You can't afford to be left out. Just as the internet bubble defined the 2000s, this coming wave will dwarf it, fueled by liquidity, by necessity, and by belief that the game is too big to stop. Yes, there will be crashes along the way. The NASDAQ could fall 30% or more at times, but those corrections will be noise in the broader supercycle trend.